Hey everybody, this is Dr. Tom Carr, aka Dr. Stocks of DrStoxx.com, DrStoxx.com. Been in business since October of 2002, publishing daily and weekly market letters. And this is coming to you today live from the options room. We started an options room in Discord way back, well, not way back, in January, late January of this year. And we're in a fourth or fifth month now. And it's been a challenge, but we're still doing quite well on the overall return basis. We do long calls, long puts, uh, debit spreads, and covered calls. And we'll probably be venturing, if the market kind of stabilize and normalize a little bit, we'll be venturing into some put selling income plays, which is my favorite way of taking money from the market. Just hasn't been conducive to that with all the downside selling pressure. But in any case, it is what it is. We can only trade the market we have, not the market we want. So I just welcome you to come over to DrStoxx.com if you want to join us and a great group of traders who are all interested in trading options. And I jump on the live mic every Tuesday and Thursday afternoon to do a little bit of chart analysis and trader training. Then go to the subscribe button, go down, scroll down the menu to the live options room, and you can add on our live trading room, which has been in business for about 4.5 years now, for an additional discount price. Okay, enough of that. Let's look at some charts. So we're going to go over to TradingView, and I'll explain my chart to you here, the parameters that I normally have on here. These vary almost from day to day because I have a series of indicators that I like to cycle in and out, and I don't like to have them all on my chart at one time. So I'll put it on, I'll take a look at it, analyze with that indicator, take that one off, put another one back on. But this is probably the basic set that I normally have on here. Let me get rid of some of these lines. So we've got a candlestick price chart on there. This is the S&P 500. The colored bars that you see in the background there overlaid on the price are the linear regression channels. I've got two of them on here. One set at the 1.5 standard deviation that gives us this salmon bar down below. That's kind of a sell zone or a buy the dip zone. And we've got a lighter blue color up on top. That would be take profit zone or sell short zone. And the 2.0 standard deviation, if you put that one on top of the 1.5, and this is both with a 100 period look back, you're going to get this nice little pink zone down here below. That's the buy zone in an uptrend. And powder blue zone up on top, that's the sell zone in a downtrend or short zone in a downtrend. Take profit zone in an uptrend. And boy, those just that indicator alone, you could make a pretty good living trading the market. Now, of course, you want to increase your odds and your probability of getting into the best setups. So we have a few other indicators on here. We've got the 21 EMA, which is your short-term indicator. When it's rising, we're in an uptrend. When it's falling, we're in a short-term downtrend. Right now, the 21 is rising, so we are in a short-term emphasis on short uptrend. The 50-period moving average, that is your big, most important moving average. A lot of your mutual funds, hedge funds, big money managers will key on the 50-period moving average. They like to buy when it gets a little too far away to the downside. They like to sell when it gets too far to the upside of the 50. And when it pulls back down into the 50 from above, that's also a buy zone for them. Always good to know how far away price is from the 50. And if it's tagging it, and is this going to be a rollover? Is it going to be a bounce? 50-period moving average is a good marker for that. The 200-period moving average is our long-term trending indicator. We don't do a whole lot with it, but when price gets back to the 200, you want to pay attention. It doesn't happen very often, but when it does, you want to pay attention. And it is rising right now for the S&P. Everything else is falling. The short-term uptrend, long-term uptrend, medium-term, intermediate-term downtrend, and that's kind of where we're at right now with the market, giving us maybe a little bit of a mixed picture. Short-term up, medium-term down, but overall, we're just really waiting for the macro environment, which isn't on this chart. The macro environment, tariffs, inflation, the Fed, recession, geopolitical tension, Ukraine war, Israel, all kinds of things are being factored into the market. And it's not been an easy background against which to trade, particularly the tariffs, in the absence of concrete trade deals. We don't have any yet on the table. We've had a lot of hinting at them, but haven't had any really be concretely put out there. And so we're still waiting. There was some talk over the weekend. There was talk again yesterday, a little bit this morning, that there are a couple of deals ready to go, but very soon, coming very soon, but still yet nothing. So the market's in a waiting period right now. All right. So that's what I have on the indicators. That's what I have on the chart. Volume indicator down below, and this is the good old granddaddy MACD, which is a momentum indicator indicating a trend, oversold, overbought, and bullish crossovers, bearish crossovers. And this histogram right here, which are the red bars hanging down from the zero line and the green bars rising up from the zero line, will tell us how strong the trend is, right? Big green bars is a strong bullish trend, which is what we've got right now. Big red bars, strong bearish trend, which is what we had a few weeks ago. And of course, then everything else in between. Now, let's see what we can find out from this chart. So we've got the S&P 500. We have, as I said, we have some bearish things going on. The downtrending, downsloping LRC is very clear. We're up at the top. We tagged the blue zone 2 days ago on Monday, pulled back a little bit yesterday, although it stayed in the upper third of yesterday's bar. Let me zoom in a little bit so you can see this more clearly, right? This is the big green stick on Monday. Pretty decent volume. Got all the way up to the top, the bottom of the blue zone, which is typically where you see things start to cool off for a little bit, especially when things are downtrending. And they did, right? They cooled off for 2 days. So yesterday, today is Tuesday, right? I'm sorry. The big green stick I'm looking at here is Friday. So Friday tagged the blue, gap down a little bit. It was not a very good day. Today, even worse, right? We had the gap down and we continued lower on into just a little bit ago. We hit our lows. Actually, we hit our lows just off of the open, and we've been bouncing modestly, softly, not very convincingly off those lows ever since. All right. Now, keep in mind, this is the futures contract. You're going to see these candlesticks that include overnight data. So this bar actually opened 5 p.m. last night. All the overnight data, all the European market, all the Japanese market baked into that. And then it opened up at 9:30 this morning. From 9:30 this morning, we went right off. We went up initially, came back down. Let me show you a chart. I'll give you a little better picture of it here. So this is the SPY, the ETF fund for the S&P 500. Here's your opening bar. We had 20. This is a 5-minute chart. We had 10 minutes up upside, 15 minutes of downside to set the lows of the day, and we've been trading against that low all ever since. We had a really strong up, nice little bull flag right here, consolidation. That broke out, gave us a little more upside, pulled back into that same zone, more or less. Big green stick, and I have no idea why that happened because I was on a lunch break. If you know why there was such a big green stick, right around 12:15 today, you can type that into the you can type that into the main room if you know why there's a big green stick there. I was in the gym at that point. Of course, it didn't last very long. Came right back down in, and we've been in this trend down ever since. Right, here's your support line. Here's your resistance line, and we might, optimistically call that a falling wedge. Falling wedges can be bullish, but only when they break out to the upside. And of course, we're not there yet. So let's keep an eye on that one. All in all, considering how far the market has rallied, right? Here's your April 7th low, intraday low, very lows, below 20%, which means bear market. Here's your flash knee-jerk rally back up, and that was on Trump saying that he was delaying tariffs 90 days. Right? This whole thing is about tariffs. Everything about the market is tariffs, tariffs, tariffs. And if and when we get some concrete deals on the table, you're going to see a face ripper rally because we just can't see the market rallying until we get that all out on the table. Now, here's the thing about recent price action that is very hopeful, in my book at least, and that is, let me give you a little bit of a primer. Some of you know this already because you've been with me for a while. Typically, in a downtrending market, you're going to see a sequence of lower lows and lower highs, right? Kind of a lightning bolt, lower lows, lower highs, lower lows, lower highs. Now, when does that trend come to an end? Well, the only way it can come to an end is that if we print a higher low and then we break out of this cycle by going above the most recent pivot high. So we set a new higher low right there, and then we start to set a new higher high. Well, that is exactly where the market is right now. It's about as a picture perfect case of my, I don't know what you want to call it. It's just a pattern that tends to end downtrends. Here's your sequence, right? Here's a lower low, lower high, lower low, lower high, lower low. That's not quite a lower low. Here's your lower low, lower high, oh, higher low. Now, if we can take out that pivot high, we might have a good chance, a very good chance, in fact, of ending this downtrend. We did. We took out that pivot high. Now, there's a qualification here, because if you look at pivot points, the pivot points indicator, which I could put on the chart, it's not going to register this as a pivot high. The pivot high is over here. And to be honest, we haven't broken that one yet. So if that is indeed the pivot high that will break the downtrend, then we still have some work to do. We're going to need to get up to about 58.40. And right now we're at 56.30. So there's still a little bit of room to the upside for the charts. Oh, look, now here's SPY breaking that nice looking bullish falling wedge, and maybe printing a new trend higher out of that. No guarantees, right? No guarantees at all. What we really want to see on this breakout, we had a really nice, big volume, high volume print that tested the upside of that RTL, the resistance trend line. We had two little bars that pulled back to do some back and fill on low volume. What we want to see here on this breakout bar, if it is a breakout bar, is a lot more volume. Volume's not coming in yet. Okay. That's just a 5-minute chart, of course. Now, keep in mind, a typical swing trade is going to last a week, maybe two, and you're looking at daily bars, so that's 5 to 10 bars. If you're looking at a trade on the 5-minute chart, 5 to 10 bars is 25 to 50 minutes, half an hour to an hour. So if I say it's going to break out, I'm not saying it's going to rally for the next 2 weeks. I'm saying it's going to rally for the next 30 minutes, or 45 minutes. Maybe it'll rally into close if we get a little bit lucky. So tomorrow, FOMC, Chairman Powell will be on board. He's not expected to lower rates at all. It certainly won't raise rates. He'll talk about the labor market being a little stronger than people thought it was. He'll talk about inflation still being pretty low and coming lower. He'll probably talk about negative GDP as a consequence of tariffs. And he's going to mention tariffs, and he's going to mention unclarity or uncertainty in the market a lot. That's what he did last time. He'll probably do that again, because we're still pretty much in the same place. No real improvement yet. A little bit here and there, a little bit of improvement, a little bit of a hope thrown out, but nothing concrete that I've seen at least yet. So what we need to hear from Chairman Powell, however, is that he has one eye on the labor market, he has one eye on inflation, and he has a third eye somewhere on the tariffs, and he's got his foot off the brake. Right? That's what we really want to hear. We don't want to hear that he's ready to raise rates. We won't say that at all, I don't think. We want to hear that he's ready to cut rates if and when the market needs it. Right? He is ready to save the market. He's ready to be the champion of the market. And it's kind of what he was saying last time. And if he can say that again this time, we should get a pretty decent rally. So my own personal map, let me drill down to the hourly chart, and I'll show you a little bit more about this. My own personal map for the next few days, and that's really all I've got. It's just about all I've got. So this is the hourly chart of the S&P 500. We have come down in an uptrending LRC. We've come down into the pink zone. That's typically where you see things bounce. It did bounce, got all the way up, tested the 50-period moving average, came right back down again, and now we're starting to get at least potentially a higher low, more of the bounce, follow through on that original big high volume print. That was 3 hours ago. We saw that on the 5-minute chart. My map for the next couple of days is that we will rally. Where's the 7th? This whole next stretch is the 7th. We're going to rally modestly, not anything to get too excited about. 5,700, that would be nice to get up there. We were up there yesterday. We were up there on the 5th yesterday, 5,700. I think we probably will get a test again tomorrow. If not tomorrow, then follow through on Thursday. My thinking, however, is that unless we get concrete deals, unless we get a de-escalation of some of these numbers, especially on China, the 50% was thrown out there, but I'm not sure that's a concrete figure. If we can really see those numbers scale back on China and or any hint at a major trading partner that has made a deal with us already, we will continue. 5750 is about where I see the S&P topping out on this particular leg. But I would not be surprised if we hit 5,700 and we roll back down and we start to print without any new development in tariffs. We start to print some lower prices. Are we going down to the April 7th low? No, we shouldn't. We really shouldn't, because right now things are better than they were back then. The economy is still okay. Job market is still okay. Tariffs have been scaled back a bit. So we're in a better place now than we were April 7th. And earnings have been pretty good overall. They've been pretty good, and most of the big ones are behind us. So we have no real reason to test the April 7th lows again. So I think we'll stay above those, and I'm pretty sure that we'll stay above the lows that we saw, that higher low that I was showing you. What day was that? Hold on a minute. Yeah, the higher lows down here at 5180. I don't see us going down that far. 5200. No, I don't see us going down that far unless things get worse. We shouldn't be doing that. But some back and fill. There's a line right here. We could test that again. That's about 5500. I could see that, into next week. I could see even a couple of weeks of maybe some modestly downside pressure with days of moving back up. In other words, a trading range, consolidation. Market's not really going up. It's not really going down. And not a bad market, actually, to be selling some premium. So maybe we'll be doing that. All right. Anyway, I'm rambling and I'm saying too much. That is the S&P 500, and you know my map. Bullish on FOMC, likely some bullish follow through on Thursday. Friday is it, unless things change. Friday is probably the day we're going to see things get weak again. But I really don't think we're going to hit some of those deep lows that others have talked about, right? What's his name? Someone I totally respect for his trading prowess, the Turtles guy. What is John Tudor Jones? John Paul Jones. John Paul Jones Tudor. Whatever the heck his name is. Anyway, you know who I'm talking about. He was out over last night saying that, the market's going to go down to new lows, right? And, all right, here two things to consider. He's a perma bear. So he's always out there focusing on the negative side of the market, and he's always been very fearful. Number two, I know that he's not necessarily a liberal. He's not politically liberal, so I don't think it's a politically motivated, but he's been pretty vocal about his antipathy toward the tariffs, and so I suspect that there is that in there as well. I don't see that happening unless things do get worse. Don't think they're going to get worse. Okay, so that's the S&P. Let's look at the NASDAQ. This is always our favorite index because it's the one that makes us the most money when we're right. We can also lose the most when we're wrong. All right, here's your line. This is a major SNR flip. It's, you know what? Let's do this on QQQ since the numbers are a little easier to read. There it is. 470. 470 QQQ is your SR flip. That is a major line in the sand with any chance of it coming down, and I don't think there's a real good chance of it coming down that far, at least not until maybe late next week. We should see that hold, and we should see that as a floor for a new trading range, somewhere between 470 and 490, maybe for a couple of weeks. Get us out to like the latter part of May, May 25th, May 26th, and I think you'll start to see by that time we should have some tariff deals on the table. I think you'll start to see people coming back into the market. There's a lot of people on the sidelines, right? Retail traders have been buying stocks. I don't know why. We're just crazy and stupid. But big money managers, hedge fund managers, they've been buying gold and bonds, and cash, 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 cash. They've been pulling money out of equities. So that's a lot of cash on the sidelines. They've been anticipating a new leg lower. It hasn't happened yet. So sooner or later, if we get above 490, they're going to have to jump back in with both feet. Otherwise, they will not have a payday. And so as long as we stay above 470, and the longer we kind of delay, you get out to the end of May, we start to end the quarter in June, you'll see the market rallying quite sharply unless things change. We always have to say that. Small caps. So I did have some hope for small caps, and I'll show you why. I kind of like what's going on here with the break of the downtrending line. Small caps have been in the toilet bowl for a couple of years now, well below all-time highs. They've been falling faster than the rest of the market. It's, instead of taking a 20% haircut, they take a 33% haircut. That's typical of small caps when things get tight in the economy. But they have broken the near-term downtrending line. Let's put it right about there just to be fair. The near-term resistance line, we've been above it for 4 days. We got above the 50, which is great. We got above the 50 yesterday again, which is great. We only fell down below it today, but everything is falling down below it today. We've got the rising 21-period moving average not too far away. And look at this volume coming in here. Not bad. Really, this is accumulation of small caps. And you're not going to see that if everybody thinks the market is going to be a disaster. Now, the one thing that has to hold, the one thing that if this one breaks, all bets are off, and we're pretty close to it. It is that line right there, which is kind of a bear flag line. We might be above that RTL, but if that thing cracks to the downside, even if it gets in this little triangle here, maybe that's kind of dead man's zone right there. That little triangle would not be necessarily a bear trigger, but let's mark that off. So if we get into that little triangle, then there's my alarm. I need to check my positions, but I will wait on that until we're done. We're almost done. Where did I go? There we go. But if it stays above the 21, if it stays above that supporting trend line, and if it stays above the RTL, I think we could see a really nice summer for small caps. Not going to bet on it just yet, but let's wait and see. I would like to see it get up above 200 and hold there for a couple of days. That would be one early trigger. And getting up above this high here, about 209, would really bring a lot of people back into small caps. So we were long gold in the other room. We took profits on it this morning when it hit our target, and of course, it just continued higher. Gold is in pretty good shape, but of course, it is telling us, the market's telling us that there is still a lot of fear out there. You've got a falling dollar. You've got a Fed that might have to cut rates. You've got central banks hoarding gold, and you've got fear of recession and fear of tariff inflation. All of those things are making gold very attractive, and so no surprise at all that it's going up. I do think that there is limited upside to gold. I would not be a buyer right now, but not terribly opposed to putting on another call play in the miners because they're not as extended, for one, and oil has been oil's rallying, so that's going to put a little bit of a headwind into the miners because that squeezes their margins. But this breakout is the real deal. And when I looked at it earlier, I thought about putting us into GDX calls, and this was a red bar. It was down at the lows of the day, and I thought, well, it's going to close the gap. Let's wait on that first. Well, it didn't. It just bounced off the lows and has rallied back up, and now it's at the highs of the day. So where's GDX going to go? Well, your first test is going to be 52.60, and if that holds, if that doesn't hold, then we could see it get, hold on. What's going on with my mouse? We could see it kind of meander its way up to the blue zone, and it wouldn't get up there until about 55, 56. So not a bad trade down here at 50, 10, 12%. So we'll see if we can leverage that with some calls. That's a possibility, just a possibility. We'll see. Now, let's take a look at the mags. We'll do these worst to best. I'm just going to do these quickly. Tesla is printing a bull flag after a nice rally off the lows. This has been not the strongest mag by any means, but it was not the weakest on the way down. As the market was cracking, Tesla was not horrible, right? So it did not. So here's your April 7th low. It was a brand new low for everything else. Tesla was printing a double bottom, so that's bullish. Now, we can't get above the 200 period moving average, and probably a lot of things can't either. It's doing a bull flag. It's right at the bottom. I wouldn't be buying it today, but if it takes out today's high tomorrow, I might get us into some Tesla calls. Facebook is above the 200, above the 50, above the 21. The LRC is still downtrending, but this looks pretty good. And it's not a very good setup, I have to say. It's kind of a low probability setup, but it's not ugly. let's put it that way. Google is not horrible either. We got above the 50. It's doing kind of a bull flag, similar to Tesla. Not the worst on the way down either. And it is it's not yet above that March pivot high, but it is above the April pivot high. And but again, everything is just kind of downtrending, and volume is starting to taper off, and it's really just sort of it's not a high quality setup. It's not the kind of setup that makes you go, I just have to get in, right? I just have to get in. You'll know it when you see it. This is not that. Amazon, I think, has a pretty decent chance. No, not really. No, it was on my green zone earlier. I'm not sure why. NVIDIA, I do like NVIDIA modestly, and it does have some, on the hourly chart, you're going to see some pretty decent stuff going on. So in fact, let's take a look at that. Let's do this. Let's bring over my market surge tool, and because I do like to use this on the hourly chart, it gives us a nice clean look. Okay, so here's NVIDIA. Here's your sequence of higher high, higher low, not quite a higher high, but a higher low and a higher low. And we're printing this. This is a 3 or 4 day high tight base on the hourly chart up near the top of the range. Now it needs to get back up here over 120, and that's not going to happen overnight. But this is showing me, at least, that it is ready to break to the upside and is not worried about testing the lows of the range. So NVIDIA on the hourly basis, on a short-term basis, looking pretty good. Let me move this aside. Microsoft, so we were in Microsoft in our trend trade letter. We just took a 20% gain on it after earnings. We held through earnings, and we bought it down here at 362, somewhere in that range there. We got out yesterday near 440, so that was a nice trade. Now it's up on earnings. It hasn't come anywhere near to closing that gap. I call that a power gap. When it's on earnings, that's a very good thing, as long as it stays above the top of that gap. It can be bought here as a swing trade. It's a lower risk, lower probability. Actually, it's not a low probability trade, but it's a low reward trade. The risk to reward ratio is not that great, but your stop is going to be here in the gap, 423, and your target is going to be the most recent pivot high, which is over here. That's not the most recent, but it is the major pivot high, 467. Okay, so that can be bought today if you want. I mean, it's not that exciting of a trade, but it's showing up. Avgo had some nice news today. I guess it was a call flow. I think it was seeing some good call flow. This is very good momentum. It is taking out a lot of the range highs. It's up on a gap. The gap hasn't closed. All of that is bullish. We've got the death cross of the 50 over the 200, but we have the life cross of the 21 over the 50. So which are you going to go with? Well, the death cross usually comes way, way too late anyway to do anything about it. I like Avgo here. It's not really set up the way I would like to see it. Nothing is, for the most part. Cisco, I don't even know why Cisco's on my list here. Let's take that off. CRM is your best human resources software, and it's been an ugly, ugly, ugly for a long time. Not really on my interest list. Apple, well, we can kind of wait on Apple a little bit. It's pricing in some bad news, some competition, some tariffs. As a big retail play, it's going to be a problematic thing. Supply chains, are they going to, if you see China ink a trade deal, you're going to see Apple probably up 5% that day and another 5% the rest of the week. It's been held back by tariffs. So I have half a mind of putting some Apple shares into our wealth building portfolio in the other room. Talked about that this morning, but it's not quite where I would like to see it just yet. So we're going to wait. Qualcomm was down on earnings, but it's bouncing back nicely, filling the gap. And Netflix is your monster trade. Netflix is the strongest of all the megs. It's one of the strongest trading stocks in the market right now. And every time it dips, it gets bought back. So nice looking chart. I'm not sure how much more upside there is here to Netflix, and we're starting to see a little bit of some weakness show into the hourly charts, which I was looking at in the other room yesterday. But it's a good hold, a very good hold right here, and hard to find that kind of technical strength in this market right now, especially in major stocks. All right, guys, let me see if you have any chart requests. If you do, you can type them into the live option trades room, the main room. All right, let's take a look at PLTR, Felipe. So, of course, everybody knows PLTR hit a double top this week and printed earnings last night. The earnings were good. It was a double beat. They raised guidance. I should take it back. It was a beat on EPS. It was a raised guidance forward looking, which is very good. In fact, that's one of the best things. But they came in line with revenues. I think I've got that right. In line with revenues. That's not enough in this market, and also PLTR demands a very high multiple. Yeah, it's a great company. They've got all kinds of new contracts, and it's got the defense angle, and it's really getting very good traction with hedge funds. Right, we're seeing a lot of new hedge funds come in as shareholders, and the bigger funds, the big important ones, are buying a lot. But this was a disappointment. It was down a lot lower. It tagged near, was it 102? I thought I saw it 102 earlier today, but I could be wrong. Here it is at 108. It tagged the 21 period moving average. That's interesting, right? So it tagged it and has rallied sharply off it. It's up about $3.50 from that level. It's not a buy here. So what happens typically after earnings like this? You have that gap, and that gap is going to act as resistance. So anytime it gets back up to that line right there, 113, 114, it's probably going to roll back over to the downside. You have a little bit of a gap down below, but this is the line I would like to see it touch right here, just under 100. Let's just call it a dip under 100. If it cracks to 99, I think I might be a buyer just on the technical downside exaggeration, which is probably true in that case. Too much fear, too much panic. So a dip below 100 would be a nice buy there, but that's not going to happen overnight. And especially if the market starts to rally tomorrow and the next day, you might see PLTR get back up to to test that gap. But yeah, this is not an easy trade right here, because that could fall another 8-9%. Now, if you really like the company and you've been wanting to buy it on a dip, well, here's your dip. This is a pretty darn good dip right here. All right, but I still wouldn't wait. I still would wait. Wait a few days, and if it gets under 100, you let me know, right? You holler in the room, because I think I want to join. Let's see, ERJ. This is yeah, I know I've seen this ticker symbol. So it was down on earnings, but it has rallied back up nicely. It is in a nice uptrend. See the LRC here, how it's nicely uptrending? It comes down into the pink zone of an uptrend and rallies sharply out of that. It's not showing our bullish MAs, right? The stacked MAs, the 21 above the 50 above the 200. But the 50 is above the 200, and both of those guys are rising along with the 21, now newly rising. This is this was way up here, right? 56, 57, and then in a couple of weeks it's down here under 40. So this is a big moving stock. Let me just see what this guy is, because I have forgotten. Aerospace defense, Brazil. Oh, yeah. This was brought up a few days ago in the other room. Yeah, look at these. So good valuations, heavy free cash flow. That's a good thing to see. Projected EPS next year, very good. Um, Return on equity, not so good. That's pretty weak, but at least it's not negative like some plays. Pretty decent profit margins, good analyst recommendations, and you've got pretty good, actually very good, considering the market, very good performance. So yeah, I like this. I like this. Back to the chart. It's a little tough to play it here right off of earnings. It would have been nice if you bought it this morning, but there was no way of knowing that it was going to bounce back up and close that gap. But now that it has closed the gap, I would say give this a couple of days. It's probably going to print a few bars, 2 or 3 bars right up here in the top of that green stick. If it doesn't do that and it goes south, it would be an avoid, because maybe there's something in the report that market doesn't like. This is just a technical bounce back. So let's test it. Let it coil up here under the 50-period moving average for a day or two. And if it holds up there in the top, let's say the top third of that green bar today, then it would be a buy in my book. Alternatively, if it gets above yesterday's high, which would be around 47.27, if it gets to that level, you could also buy it right there. Okay. And 105 is as far as PLTR got. Thanks. Okay, Hood. So we are in Hood in the, we're in calls in this room. We just bought calls today. So Hood came out with earnings a couple of days ago, and it gapped up because the earnings were very good. The numbers were good. It's just that it's kind of more of a spec play. It's more of a growth-oriented play, and in the current market, valuations can get hammered a bit. And that's what happened on earnings day, but it's been green and up ever since. So that's a good sign, and it's consolidating, right? 4 or 5 bars, pretty much in the tight trading range here between, 47 and 49, not really going anywhere. But look at what we're doing. We're coiling up, printing a nice bull flag, just as we did down here. This time above the 21-period moving average. The 21's above the 50. The 50's above the 200. So there's your stacked MA, which is sweet spot for rallying forward from here. With a stock like this, you have to give it a little bit of downside room. You would put your stop, if you're trading shares, as a tight stop about 44.50, as a looser stop down here about 43, and I would let it run. This should get back up into the mid upper 50s quite quickly, market pending. And here's the thing about Hood. So we have a daughter who's at college, and she's starting to get interested in stocks because she finally has her first job and she's making a little bit of money. She and all of her friends who are in the same boat, they all have Hood accounts. Why? Because they want to trade crypto, they want to buy Bitcoin, they want to buy shares of Tesla, all the cool stocks. They want to retire early. They think they're going to make a fortune. But Hood is trafficking in that group, and that group is very eager, more so than any other college age group I think that I have experienced. I've been in the game for 22 years. Really interested in trading. They want to learn how to trade. They want to learn what to trade. Hood is going to capture that market, and Hood also has new product lines, especially oriented to crypto traders. So I think it's good. I really do think fundamentals are there. It's a little bit expensive, but that will change over time with growth. All right, guys, I'm going to let you go. I'll produce the video, get back in the room in a little bit. Now, I have a telemed appointment at 3 o'clock, so I'm going to have to be out of the room for a while, but I'll be in and out until the bell. God bless. Bye for now.